Keep in mind that 95% of all Bitcoin has been mined. So there's very little Bitcoin left, 5%. Yes. But, and this is from Bitwise. They had this really great stat, but 95% of institutional investors don't own Bitcoin.
They don't own it?
Yes.
Oh.
So if you think about that, there's only 5% of Bitcoin left.
Yeah.
And 95% of institutions have to buy that 5%. So you can imagine...
That's surprising.
Yeah, you can imagine that will cause an asymptotic rise in Bitcoin's price. Even today, I think Bitcoin can still get to $1 million. If you're worried about a cycle top, you're missing out on all the upside. So it's better to actually own it for the long term.
Fundstrat's Tom Lee argues that the same kind of life-changing 100x opportunity that early Bitcoin investors experienced is now present in Ethereum. He frames this not as a replacement for Bitcoin, but as a recognition that the market has matured, creating distinct avenues for exponential growth. Lee contends that after 5 years of being largely ignored by the market, a confluence of powerful forces is now aligning for Ethereum, positioning it at the very beginning of what he calls a super cycle, an explosive multi-year rise that could redefine the crypto landscape.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
When we first read about Bitcoin and it was under 1,000, it went to 20, and then it went to 15.
Wow.
And then it went, I think, to 50, and then it went to 13, and then it went to 120.
Wow,
So
that's like a really big fluctuation.
But over that period of time, you made 100 times your money.
Wow.
So we've, and I actually just got an email from a client yesterday that says, that recommendation in 2017 changed his life because he made 100 times his money on Bitcoin. So if you think about that, you only need to have 1 or 2 investments make 100 times your money, and then your life is changed forever. And that's what crypto really is. It's an opportunity to bet on a future. But I think that same 100 times kind of opportunity or that massive upside exists with Ethereum today because it's really one of the blockchains people have chosen to ignore for 5 years. But there's so many good things happening now. There's a much bigger factor driving liquidity in Bitcoin today.
What is it?
Well, there are 2 drivers. One is institutional investors are buying Bitcoin and crypto. Keep in mind that 95% of all Bitcoin has been mined. So there's very little Bitcoin left, 5%. Yes. But, and this is from Bitwise. They had this really great stat, but 95% of institutional investors don't own Bitcoin.
They don't own it?
Yes.
Oh.
So if you think about that, there's only 5% of Bitcoin left.
Yeah.
And 95% of institutions have to buy that 5%. So you can imagine...
That's surprising.
Yeah, you can imagine that will cause an asymptotic rise in Bitcoin's price. That's the first driver.
Oh.
The second driver is that governments are viewing Bitcoin as a reserve asset. The United States is going to... they're not the only country. El Salvador was the first, really.
Yeah.
And when governments begin to buy Bitcoin, that's another buyer of Bitcoin that I think is bigger than the halving cycle. So I think that because of institutions and governments, there probably isn't a halving cycle. And it's about 100,000 now. So that would be my first advice. The second is that they have to understand there is a huge transformation taking place on Wall Street because AI and blockchain are really going to disrupt traditional Wall Street. And so they should really bet on a future where that innovation is going to take place. And part of it is Bitcoin, because that's where you store value. But a bigger change is on smart contract platforms like Ethereum. So to me, I think Ethereum is in a super cycle. Like it's just the start of what I think is going to be a really explosive rise over the next 5 to 10 years. I think there is always cyclical risk, even with the stock market, because the stock market has bear markets. But my advice to anyone who invests, and this is from Peter Lynch, there's more money lost worrying about a top in the cycle than in buying good ideas.
Oh.
Okay? Meaning if you're worried about a cycle top, you're missing out on all the upside. So it's better to actually own it for the long term. And I'll give you an example. In Bitcoin's case, as you know, since 2010 or 2009, so now we have 16 years, you've never lost money owning Bitcoin if you held it for 36 months. So even if you have a downturn, as long as you own Bitcoin for 3 years, you'll never lose money. So maybe that's more important than worrying about a downturn. I think the most important message I would leave you is that when you think about whether it's stocks or crypto, you should understand that in the stock market, you really want to buy the best companies. That's why Tesla, Nvidia, Palantir, these are the strongest businesses, and they have trends that are not sensitive to the economy. Like if there's a recession, Tesla, Nvidia, Palantir, they're the strongest businesses. They're not the ones that are going to be hurt. Everything else is going to do worse. And the same is true in crypto, that in crypto, you really want to buy the strongest chains. And that's Bitcoin and Ethereum, maybe Solana, but these all have really good, I'd say, core underlying factors that support them.
The foundation for this new supercycle is a paradigm shift that Lee believes will end Bitcoin's traditional 4-year halving cycle. He identifies 2 new, far more powerful drivers of liquidity. First, institutional adoption is just beginning. Citing Bitwise data, he highlights the stark reality that while 95% of Bitcoin has been mined, 95% of institutional investors still have 0 allocation. As this massive pool of capital competes for the final 5% of supply, it will create an asymptotic rise in price. Second, governments are now officially treating Bitcoin as a reserve asset. This institutional and sovereign demand, he argues, will overwhelm the supply dynamics of the halving, creating a more persistent, long-term bull market.
Stablecoins, I think, the primary distinction today is really U.S. compliant stablecoins like USDC and PayPal versus Tether. Because Tether is much bigger, but it doesn't operate in a compliant way with U.S. OFAC. U.S. regulatory requirements. Because in the U.S., in order to have a stablecoin wallet to receive it, you have to have done what they call KYC, know your customer. It's a standard anti-money laundering process. So all bank account, anybody who opens a bank account in the U.S. has to do a KYC.
Okay.
But Tether doesn't require KYC. That's why it operates so widely outside the U.S. 80% of all stablecoin transactions do take place outside the U.S. at the moment. So it's much bigger outside of America. But, today there's, in crypto, you can just use cross-chain. You can swap Tether for USDC into a compliant wallet. So there's interoperability. So JP Morgan, Goldman, Amazon, Walmart, they'd love to be in the stablecoin business because then they can capture the benefits of issuing a stablecoin. I think the strongest ones are going to survive. JP Morgan and Goldman, I think, are going to be huge winners from blockchain because they, as you said, they have enormous positive reputations with governments, with institutions. They have a brand that's recognized. And crypto is a way for them to re-engineer their businesses to save a lot of money. So I think that the biggest U.S. banks are going to become global winners in crypto. To give you a perspective, the stock was $4.50 when we announced the Treasury strategy. And today the stock's $43. So it's gone up by 10 times. Ethereum has risen by 50% in that period of time. So Bitmine has outperformed Ethereum.
Would there be more losses if Ethereum goes down?
No, actually less.
Oh.
Because you're growing your Ethereum held per share. So if you took the original example.
Yeah.
Okay, so let's say on July 8th, you had $4 of Ethereum or $4 worth of Bitmine stock. And then let's say Ethereum went down 50%. The original person only has $2 of Ethereum because they bought it for $4 and it went down 50%. But today, someone has $40 worth of Ethereum, and if it goes down by 50%, it's $20 per share. So you actually made money even though Ethereum fell 50%.
Wow.
So it's a crypto treasury that's properly managed and executed will vastly outperform an ETF or the Ethereum itself. That's why MicroStrategy as a company is larger than any Bitcoin ETF. Because institutions realize it's better to buy MicroStrategy than to buy a Bitcoin ETF. The company only has a very simple balance sheet. It only has equity and it has no debt. So the company is raising money by selling shares primarily to institutional investors. So institutions are buying BitMine's stock, and then the money that's raised, and it's been running at about $1 billion per week. So institutions are buying about $1 billion worth of stock every week, is used to buy Ethereum spot. So just buying the Ethereum token. There are 3 or 4 exchanges that are executing the trades for BitMine. So the purchases are being made, in conjunction with crypto exchanges buying Ethereum for us, and then it's held in custody.
So following on that, are treasury firms like yours able to acquire crypto at a cheaper price compared to retail investors like us?
Yes and no. I mean, BitMine is able to use very sophisticated strategies to acquire Ethereum that maybe a traditional investor may not have access to, because a traditional investor may go into a crypto exchange and then just buy spot.
Yeah.
But if you're buying $9 billion worth of Ethereum, you can't buy it straight, because then the price would just go to the moon.
Hops.
Yeah. So it's important to buy Ethereum when there is liquidity.
Oh.
Meaning, it's really important to buy the purchases without driving up the price. And it's possible to do. There's many ways, but as a company, we haven't revealed our strategies. But ultimately, the company last week announced it had roughly 1.8 million Ethereum tokens. So it's bought a lot of Ethereum, but it's bought it very quietly.
While these forces are profoundly bullish for Bitcoin, Lee argues they create an even greater relative opportunity in Ethereum. He advises investors to focus on the strongest, most dominant platforms, just as they would with stocks. In crypto, that means owning Bitcoin and Ethereum. He makes the case that there is more money lost worrying about a cycle top than is lost in one, a point underscored by the fact that no one has ever lost money holding Bitcoin for at least 3 years. In this new era, investors must bet on the future of innovation, where Bitcoin is the store of value, and smart contract platforms like Ethereum represent an even larger transformation, setting the stage for its own explosive, life-changing supercycle.